Assalamu alaikum everyone. In today's lecture, we're going to talk about the importance of accurate cost data. Why is accurate cost data so important? Why is it so important that we need the cost data to be accurate? So, what if it's like not inaccurate or something? What will happen? What will the consequences of that? So, that's what we're going to discuss in today's lecture. Cost information, basically, what is cost information? It is a record of all amounts spent on variable, fixed, semi-variable costs, etc., that are incurred by the operations of a business. So whatever the amount the business incurs is is recorded in your cost information. So without good cost information, a business operates in the dark. Cost information is at the heart of current and future operations and decisions of a business organization. It's at the heart, so that's just like signifying the importance of it. We're going to look about the main factors as well. If costs are not recorded accurately, then managers will have incomplete or misleading information on which to make decisions. So of course, if you use incomplete or misleading information, then you're gonna end up making wrong decisions as well. Calculations of gross profit margin will lead to misleading information in the income statement if cost data is not accurate. So if you don't have enough cost information, you won't be able to calculate your gross profit margin, because of which your income statement would not be accurate as well. If an inaccurate breakdown of cost is kept, then variations in any specific cost can be identified. That is, accurate cost information is essential to monitor any trends, either increasing or decreasing, in the cost of a business, allowing remedial action to be taken. So it is very important for you to have accurate cost data, so you can continuously monitor your trends of the cost, whether it's increasing or decreasing. And if it's decreasing, then okay, you can increase your prices, or you can invest the profits that you are gaining somewhere else. But if it's increasing, then you have to reduce your prices, or you have to look for some alternative resources. So you continuously need to know how is your cost, how the trend is going, is it increasing or decreasing. If you don't have the accurate cost data, then that's not possible. So for example, if raw material costs have suddenly increased, then cheaper alternatives can possibly be found, or there might be significant increase in labor costs identified that might lead managers to consider other methods of producing their product or providing their service, such as shifting to capital intensive production. So if you know, okay, what's going to happen, your raw materials are increased, what should we do? Or like your labor costs have increased, then you should either go for capital intensive perhaps. What could be done at certain, you need to continuously look at what's happening to your cost, why is it increasing or decreasing, and what could be done. So this was just two examples of that. Like if your raw materials are increasing, what can be done? Or you can perhaps have good you can perhaps like go to different suppliers. Or if your labor costs have increased, then you will have to shift to capital intensive production if that's possible, more feasible. So business must carefully record all their costs accurately so that profits can be determined each period, and managers have the information to make decisions. Accurate cost information is necessary to control costs in order to maximize profits. So of course, as we discussed, the first point about the uses of cost is that it is used for calculating profitability. So if you don't have accurate cost information, then you can't calculate your profits, and if you can't calculate your profits, then you can't make a wide number of decisions, such as like expansion or not. If you underestimated your cost, let's say your cost was below than what it when you recorded your cost, it was actually much more, but you thought it was less because of your inaccuracy, because of which you think your profits are high. And when you think your profits are high, you will just say, okay, let's go for expansion. But when you started expansion, then you realize, oh, I don't have enough profits, my cost information was wrong. And by the time you realize it, then boom, your expansion is in crisis, there will be cash flow crisis, and eventually the business will have to discontinue its operation. So a wide amount of just signifies the importance of accurate cost data, that in terms of calculating profits as well, that you need to have accurate cost information for identifying your profits and maximizing them as well. How you maximize them? By identifying the cost and reducing them. So all resource allocation decisions are dependent on cost information. When you're deciding suppliers, setting prices, investing or expanding, all of these resources, you are basically allocating your resources. So all of this is dependent on your cost information. It is vital for setting budgets and targets as it allows managers to see if spending budgets are being followed. Actions can then be taken if targets are not being met. So you can see, okay, if the budget is being used properly or not, and if the targets are not being met, what should be done? Can we instead motivate our employees to increase their productivity, or perhaps go to labor intensive? What is the reason why we can't reach the target? So it is also important when comparing the performance of a business with that of its competitors, and that is what we call inter-firm comparison. Hence, controlling costs and becoming more efficient is often the key to competitiveness, and therefore, companies need to use resources effectively. Remember the definition of effectiveness versus efficiency that we did in operations first chapter, and effectively is what? Meeting your goals, meeting the objectives, like meeting the, in this particular case scenario, we have to meet our customer requirements. That is being effective. So an accurate cost accounting system is vital. What was that? Like, we need to be efficient as well in competitiveness and use the resources effectively. Use resources such as that you can meet your targets, and also be efficient so that you use the minimum amount of resources and hence have a minimum cost. Cash flow forecasts and break-even analysis heavily rely on accurate cost data if they are to be useful. We want to talk about both of these key techniques later on in the chapter. In this chapter, we're going to talk about break-even analysis and cash flow. It's a different chapter for that. But the main idea is that both of these techniques require accurate cost data. If your cost data is inaccurate, then you're just wasting your time using these techniques, because you won't get a proper result on which you can rely on. Accurate cost information is very important in effectively deciding prices, such as low prices could be charged to increase sales if costs are low, or same price could be charged even if costs are low to increase profits if the business had a good brand name. So that's just one of the example of how you could use cost for, how if you know the accurate cost data, then you can set up your prices. Like if you know your cost is low, then you can just I either keep the low prices, either have the same price and have a greater profit, or like if costs are low to increase profits if the business had a good brand name. So if your costs are low, then you can just increase your profits by increasing your price, or like keeping the same price. Sorry, I just got you all confused, so I'll just reiterate that thing again, that if your costs have reduced, then you have two options: either go with the same price, and that means you'll just have more profits, or you reduce your prices so that you can have more sales revenue. And that we discussed in marketing sector with the price elasticity demand concept, that when you increase your prices, your demand will decrease, so your sales will also decrease. Okay. However, not all competition is price competition. Therefore, in some circumstances, the cost information might be less important. Like for example, if a business can develop a USP, then they might attract customers even if their cost and therefore prices are higher than rivals. So that's the whole idea, that it's not always important, but generally it is. But in certain scenarios where circumstances where you are a branded business, you have a USP, your business stands out from others, then even if you have high cost, then that's okay. You can charge high prices as well. A good example could be McDonald's or Apple, because they have a very great brand name. So with that, we are done with cost information, why cost data is important. And let's look at one final thing about cost, that is the problems in allocating cost, before we end this lecture and move on to break-even analysis. So when we say problems in allocating cost, we mean the allocation of fixed indirect costs or fixed costs, because indirect costs are basically fixed costs. One problem faced by a business when attempting to calculate costs accurately is allocating or dividing up indirect costs between different elements of the businesses that produce a range of products. So what basically means is that if you have two factories, they both produce the similar products, okay, but how will you the cost of those products are direct to that particular cost center, that is the factories A and B. But how will you determine the indirect cost? How will you divide the indirect cost between the two departments? Because you don't know stuff like, will you do 50-50 or you'll use some other resources to determine how much each factory should incur, how much percent of that indirect cost should each cost center incur. So one reason why it is difficult to calculate the total cost of producing a single unit is that indirect costs can be allowed in different ways. You can't just do 50-50 with this, like different ways for dividing up your indirect costs, and this can result in different cost figures. As a consequence, managers may make decisions that are incorrect, right? So when a business produces a number of products using a single factory, office or factory, it is difficult to calculate the total cost of producing a single unit of output of any of its products accurately. So let's say if we don't have enough two factories, we just have one factory, okay, factory C. It's producing hundreds of different kinds of products. How will you know that which product, how much percentage, let's say it, let's just write the information down that it's producing 100 products, okay, and 100 products, sorry, just ignore my handwriting, 100 products, and it has a indirect cost of $5,000. 100 different kinds of products, okay, not the units, 100 different kinds of products. So how will you say which product should have how much? You can't just equally divide them all, like, okay, 100 products, we have 5,000 fixed costs, let's just divide them, and let's say 5,000 divided by 100, that gives us $50. So $50 is the indirect cost for each product. No, we can't do that because we don't know how much the profit each product is making, or like how much of the indirect cost is being used. So let's say the indirect cost, most of it is of electricity, and some of the products use more electricity, require more work than others. So those particular products will have should pay for more, for a greater percentage of this indirect cost as compared to the other products which don't use that much electricity. So the basic idea is that you can't just, the allocation of this cost is very important even if you have one factory, and if you have two, then that just makes the thing worse, even if the product you are making is just one, but still you're making one product, but you're making it with using two factories, so you can't just divide it up. So when a business produces a number of products using a single factory, it is difficult to calculate the total cost of producing a single unit of output of any of its products accurately, that we just discussed. The problem it faces is how it allocates indirect costs such as marketing and administration. So you just gave an example of electricity bill. You can also say marketing and administration, that maybe some products require more marketing than others and some require more administration. So because of that, they will have to pay a greater percentage of indirect costs as compared to the other products. So that's just the whole idea. And let's look at another example where we have two different factories, okay, this factory A and that factory B. Both produce the same sort of products. Let's say this produces eggs, let's just say it's an egg factory. This produces eggs in sorted order of sizes, and this just produces like 6 eggs in small tray, 6 medium, 6 large, and this just produces all the eggs, whatever eggs they are, the same size. They just don't sort it, it's just like 12 eggs in a box. So because of that, they both produce the same eggs, but like they sort it differently. And because of that, they both have different demands. And here's just information that, okay, the revenue this has been generating is $0.04 million. This is $0.15 million. The gross profit margin of A is this, the gross profit margin of B is this, it's 32.5%, this is 50%. So overall, B is a more profitable product as compared to A, but we don't know the cost yet, so you can't just say that's more profitable because you don't know, like perhaps B, using this information we know that okay, B is making more profit, B is making more revenue, so B should be the one paying more of the indirect cost. But what if the indirect cost was used for marketing of A or administration of A? So the whole idea is that you can't just easily allocate your costs. They are problems. So thanks for watching and Allah Hafiz.